You're a life insurance agent looking to figure out how you can make $40,000 per month. That's your goal. Maybe you're at 10, 15, 20. I'm going to be breaking down exactly. My name is Trey. I'm the owner of Agent Lead Lab. We've helped over 550 agents issue pay $40,000 per month in the past 3.5, almost going on 4 years. So safe to say we have the blueprint. So I'm going to walk you through step by step what it looks like, no matter where you're at as an agent. If you are brand new, all the way to if you're making 20, 30K and you're trying to get 40K plus per month, I'm going to show you exactly what we've been doing with our clients and how it can be super predictable for you. So let's just go ahead and hop in. Let me shrink myself here. Let's do this. So first of all, let's say you are an agent. There's a few different type of agents, right? So type of agent. Let me actually make this a little bit bigger for, let's go like 15. Yeah, cool. Type of agent. All right. So you've got your 10K agent. You got your less than 10K agent. Maybe I should have flipped these, so I apologize. Let's go here. Let's go less than 10K agent. Let's go 10K agent to about like 20K, right? And then just 20 to 40. So let me first of all break down like why these are the filters in which I think through. And obviously, let's go 40K plus slash agency owner. And I have another video where I break down that as well in terms of like agency owners. Talk a lot about like our packages and how if you're an agency owner, how you should be thinking about scaling and growing your team modernly, not like the old school method, and what's actually like working for people that are making money, making millions of dollars per month. Their agency is growing. But for this video, we're going to be talking about, so if I'm an agent, I'm making less than 10K. I look at these three frames because there's a few things you need to know. If you're making less than 10K, you should be focused on working aged leads. We're going to break that down. If you're making 10 to 20K, you're transitioning from like aged leads to semi-intentful fresh leads. And then if you're doing 20 to 40, you should be focused on fresh leads. Okay. Because at that point, your goal should be to buy your time back. And then when you buy your time back, you're trying to build an agency. Now, unless you're an agent that's like, I just want to get in the trenches and just work for the rest of my career, and I don't want to build a book of business, I don't want to actually have a team, then like, cool, just do everything I'm about to say for the aged leads and keep your costs as low as possible and make it and just make as much money as you can. Because at that point, you're like, I just want cost. The time thing doesn't matter to me. So if you got a dollar, if you got AI, like whatever you use, that's essentially what you would like to do. That's fine too. This is going to be for agents that want to get to 40K and want to get to 40K fast, truthfully. You don't want to sit there all day. You don't want to have to dial for 20 hours. Like this is going to be, or 12 hours, I'm sorry. This is going to be for you. Okay. So let's first talk about the agent who's making less than 10K or agents that like running aged leads, like high profit margins. So the easy way to look at this, right, is like you're just trading time for money. Okay. Now, if you're newer, this is all you have. Most agents coming in don't have like big lines of credit or available credit that they can put on a card and spend a few $1,000s on their first day. Although that was kind of like how I was taught my first day. They told me to spend $800 on leads, all age leads. It's funny because now we work with clients who are like $350 a week is a lot. And I'm like, are you out of your mind? Like, why do you think that that's a lot of money? Like I don't know. Very interesting. But nonetheless, they're spending, a low portion of money, and you're willing to dial all day long. Okay, if you're a new agent and you're making less than 10K, you should be here. You should be spending most of your time here. You should not really go into doing fresh leads until after you make 10K because you don't have the skills. You lack the skills. That's the point. Like when you're making less than $10,000 a month, it's simply just like work ethic, truthfully, and really some skills. Like because if you dial the leads enough, you're gonna make more than 10K. Like you could really be horrible at selling. Like you could just be god awful. But if you pay for a few $100s a week in leads and you just hammer the phones all day, you will stumble across deals. That's just the law of numbers. And if you stumble across enough deals and if you're calling enough, you'll make enough money to get past $10,000 a month is like absolutely nothing. You can get there with pure will. Right now, when you go from 10 to 20, and so I break it down, you need a little bit of skill. So you're going to be like, okay, I'm basically going to double. It's like you've probably exhausted all the time and effort and energy you could put into making 10K. So it's like, if you want to double that, you really got to start improving your skills a little bit. And when you go from 20 to 40, it's at that point, it's purely skill. Because there's agents that work aged leads that make 20 to 40K because they're just really good on the phone. Right? Well, they just need less opportunities and they just make as much money. And the people who make 20 to 40 who do buy fresh leads, like they literally are just like, I just want my time back. Okay. So when you're working age leads, like our blueprint is simple. If you make less than 10K, you need to work age leads. Prove it. How can you prove that you deserve fresh leads? You can either work your butt off, like I just said, right? Or you can improve your skills, right? So it's literally just work ethic or skills, right? That's gonna get you to 10K. Really simple. Okay. Now, when you get past 10K, you have two options that you can look at, right? So I would like to see this. You have two options once at 10K, right? So option one is that you just continue plus improve skills. Option two is that you continue plus buy fresher leads and improve skills. Okay. Now, how we look at it is once you get to 10K, you should really just buy better leads. Because when you buy better leads, you're going to give your time back. And then if you spend the same amount of effort that you just did to get to 10K, or use the same amount of skill that you did to use the 10K to fresher leads, you will make more money faster. And then you can reinvest that money to make money faster again, right? So the jump from like 10 to 20K happens instantly, right? The jump from 20 to 40 or 50K is not as quick because there's a few things that need to happen. So when you transition, right, into fresh leads, right? So we're talking about the people that are doing 20K plus. And this is just, once again, the people that want to buy their time back. So people doing 20K plus want to buy time back. It should only be fresh leads. Now, I just had this conversation with one of our clients. This is how you think about it, right? And I'm going to pull the screen up here because I'm going to do some talking. So you want to think about the fact that when you're jumping from 20K and you're trying to get to 40, 50, and you realize, hey, I don't want to dial all day. I want to buy fresh leads. You need to look at leads like this, okay? So this is like the easiest way for me to explain this, and I'm going to hop back in. So you want to look at like mortgage protection. You want to look at IUL/advanced market. And honestly, these are two, so let me actually not do that. Let me do IUL or general life. There's a lot of people are doing that now, right? Advanced market. And then you have like your final expense. Now, these are, the way I like to look at this is like, I think about demographics. I don't think about leads. So what's the demographic of mortgage protection, right? You're going like 40 to 70 homeowners. That's the easiest way to look at it. Okay, IUL, you're going to do like 30 to 60. And these are typically just going to be like everyday individuals. Now, people want to like make these like, oh yeah, these are people that just like have businesses. And I'm like, come on, man, relax. Like, are people that have businesses really just going to be online scrolling, looking for like trying to find you as an agent? Like, no, they're probably just going to, if they're really making a lot of money, they're not going to be filling out forms. Now you'll stumble across that, but like, this is just middle class. Like, just keep it simple, guys. Everyday Americans, individuals, right? They have like basic portfolio. And what I mean by that is they're going to have like 401ks, right? Roths, etc. I'm not going to waste the whole time. You guys get the point, right? Advanced market. So now we're looking at, 59 plus, want to roll over money or have financial advisors, right? So FAs, okay? And you're typically like competing with other financial advisors. And then final expense is really simple. You look at this. This is going to be, I bet, it's going to be 50 to like 90-year-olds. And this is also included, like, let me just put this in here, disclaimer, because I know a lot of people watching me, they do vets. Okay, so let's go through these demographics because this is like something that I don't think people understand, and they get very frustrated. And they're like, yo, like I'm making a lot of money. I'm trying to make more. I just want to buy more leads, more. And I'm like, yo, that's wonderful. I love it. As a lead guy, I just love it. You're like, dude, I just want to buy more leads. But let's call a spade, okay? You can get to 40, 50K in a numerous amount of ways, okay? One of them could be you could work age leads. Like I said earlier, you could just dial the phones all day and you will make money. But it's like, do you want to dial all day? You're not going to have a life, right? Then your other option is like, okay, I do a blended approach. You're still dialing, right? But you're working fresh and age. At some point, just make a decision which one you want to go down. When you get to fresh, then it's like, okay, it still comes down to time. Because if you buy mortgage protection or you buy final expense, you making 50K is going to look very different. If you're buying mortgage protection and you're trying to make 50K, you only need like 100 leads. Genuinely, like you don't need a crazy amount. If you're going to do vet or final expense, even if they're fresh, you're going to need about 200, 300, 400, 500, maybe 300, 200 ish, 250 leads. Like that's an extra 150 leads. It's like, oh, well, that's not bad. Yeah, that's a lot more people. And you got to think, and I'm 100 mortgage leads in a month to make 50K is like not really crazy like that. You could probably get away with 75 if you're just like an absolute savage. But rest assured, here's kind of what I'm getting at. You're basically going to need double, like I would say like 2.5 the number of final expense or vets in order to make the same amount that you would for mortgage. Now, granted, your annual premium for vets is like a lot higher, but just follow what I'm saying. The reason being is because you're dealing with a demographics. You're dealing with homeowners. What are most homeowners, right? They're married, so you're gonna get a lot of his and hers. So one policy where if it's a vet or a final expense, there's gonna be one person. And you might get a his or hers, but most of the time it's just like one person, right? They're on Social Security, disability, or they're like they're a vet, they have like extra money, whatever. But you're not just smacking his or hers. When you do a mortgage, most of the time you're gonna get a his or hers. Like most of the time, because a lot of people that are homeowners are typically like married. That's just kind of how it works. Middle class, right? It's also very, 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 very sticky. Okay, so your 50K that you're making, while you're spending more. Don't get it twisted. You're going to spend more for mortgage protection leads than you will for vet leads. So once again, if you're a price guy, cool, go with vet. But you have to think about how you're going to make 40K consistently. Because I don't want you guys just like, oh yeah, Trey's like talking about this, or I do this to make we've been almost doing this for 4 years. I've worked with so many agents that are like, yeah, I'm making 50, 60K. And then a year later, I'm like, hey, bro, what are you doing? And they're like, oh, I left the insurance industry, chargebacks, and all this other stuff. I'm like, Then I talk to other people that have been making 40, 50K every month. They've been working with us, right? They're super consistent, and or they're working with other people. But what are they doing? They're typically working a different lead type than what everybody else is doing. Okay. So I'm not trying to trash final expense and vet because we have agencies that's what they do. Right? So like I'm not anti that. I'm just trying to give you all a bunch of different options. Instead of looking at lead types, think more about the client demographic of the people that you're dealing with, right? Like homeowners have bank accounts, etc. Now you go to general life. I love that. Or IUL, 30 to 60-year-old middle class America. They're also going to be very similar to homeowners. Now, not as many his and hers because it's going to be like a per person investment. It's not going to be like, oh, yeah, you set my investment up, set this other person. That will happen on referrals, but it's not like an immediate thing, right? Because you have to understand what general, now here's the thing. With general life, you're going to write a lot more business with way less leads. Like if I give you 100 general life leads, you're going to, or IUL leads, I'm sorry, or whatever you want to call them, just individuals that are looking to leverage life insurance for tax-free retirement options. I think I can say that to keep it super simple. I use IUL because that's what everybody knows. But like whatever you close them on, if you're a whole life person, I'm not here to argue about what's better or what's not. But regardless, it's more or less about like, all right, these individuals that you are currently selling, 30 to 60-year-old everyday individuals that have basic portfolios, middle class America, you can do so much. Like you can come in, sell them a term, you can sell them a whole life, you can sell them an IUL. If you financial advisor, you could position them that way. Like the opportunities are endless. They're a lot younger, so you can probably write bigger policies per person, which is what we typically see with our clients. And you need less leads. You probably need less than you do with mortgage to make the same amount. If you're trying to make 50K with like tax-free retirement, I mean, you need like 50 to 100 leads, I would say. Mortgage, you probably need 100, maybe 125, like I was saying. Final expense, you're going to need 150, 250 to 300, if not even more than that, because the annual, the policy per person is so much lower. Now, this is something that like most people don't spend time on because they're just like, yeah, I'm just going to keep making money. But like, you have to understand like, what are your goals? What type of person are you? Because making 40K, 50K, 60K, whatever your goal is per month is not necessarily like, you can do it with any of these. You can do it with any strategy. There's nobody like, I'm not going to say, hey, this is the only way that you can make it. I'm just saying like, this is how you can make it. And there's all sorts of different ways that you can do it, like skin the cat to put yourself in the best position. Now, if you move into advanced market, completely different, requires an immense amount of skill set. Most people want to get here, but will never put in the time. One of my biggest case studies, one of my close homies, like we have a good relationship. We've still been working with each other to this day. He focuses on advanced markets. So annuities, he has his own fiduciary, he has his own team. You all have heard me mention him. His name is William. He absolutely crushes it. But what people don't know is in our first full year of business, when he went into his second year, what we started doing was that he was like, man, I want to, there's something else. So this is for those people that are willing to like step to the next level and like get kicked in the face. Now, don't get it twisted. Like, you're going to spend a lot of money and you're going to fail because you're competing with people. If you're a life insurance agent, you're competing with financial advisors. This is all they do. And financial advisors and life insurance agents don't really like each other, for those of you all who do not know. So understanding that you're going into a territory where your competition is probably talking down on you, right? And you are already kind of at a disadvantage because some of the things that we've learned as life insurance agents, we need to change our thoughts when it comes to a true advanced, like actual advanced market that cares about clients, right? And I say that to say, with this, you need even less leads, right? To make 40K, you can make 40K off one deal. So like you need 50 leads, like 25 at the, like, I mean, it's going to take you a lot longer. So it depends on how fast you're trying to get there. But I mean, we have people, they only need 20 leads and they're going to make 50K. Like, it's not, let's call it 50 at most, right? Like, as you say, you're writing smaller deals or you're at a company where their payouts on annuities are significantly lower, right? Then yeah, you'll probably need a little bit more. But here's, like, if you can't see, depending on the lead type that you like or the demographic, I apologize, that you're looking for, will depend on what leads you need to work. Will then depend on how much you need to work. Then will depend on how much you need to spend on leads. And like, before you even try to figure out like, okay, how am I gonna make 50K? Like, you need to identify what type of lifestyle am I trying to build? And going back up, am I somebody that wants to get between 20 and 40K and I'm good? I have tons of agents, that's all they do. They're like, dude, I just want to get to 40, 50K and I'm cool. I don't want to build a team. I just want to do it without having to spin my wheels all day. And you know what I tell them? If I'm you, I would run mortgage protection, right? Because if you run something like tax-free retirement, general life, IUL, or even if you run an annuity, while you could definitely make significantly more money, right? But the amount of time it's going to take you to learn the skills, to follow up with the client is just not worth it if you're just not trying to build anything. Now, if you're trying to build a business, meaning you're trying to build an agency, you can go from final expense or vet to mortgage to tax-free retirement and then to annuity, and then have your team set up where they want to be, because the highest lever to pull is annuity and advanced market. The highest lever once you get good enough, because your payouts are so big that you don't mind working cases and you're not stressing because it's just conversation. Like, all my annuity agents and agencies, all they do is they're just really good at conversing. They actually just become really good at sales rather than like becoming like a rep that's just like working leads all day. Like, it's not the same thought process, but it requires an immense level of skill. But you need to work backwards and figure out like, what is my end goal? And most people come into the space, even myself, and they're just like, well, I'm gonna just do it this way. And it's like, why? And like, oh yeah, well, they just told me. And like, okay, that doesn't really make sense. Why don't you figure out like, what do you want to do? Because if you're just working these leads because it looks good and you can like post on social, but once again, behind closed doors, you're broke, it doesn't matter. And like, that's the thing, is like, I hate to say this, but I don't have any skin in the game. Like, I don't get paid when my agents get paid. I get paid for doing a good job and giving them the leads to help them make money. So it's in my best interest to generate them the best possible leads and provide that with them. If they're a partner, it's in my best interest to make sure that their entire agency is taken care of. So I need to figure out and find ways to solve problems that fit those two things. Now, understand that if your upline or somebody that is not that is directly profiting off of you making money, which I 100% think you deserve to do that, you should then ask like, what do I want out of this relationship? Because when you come in, they're trying to build their business, which you got to respect. But then on your end, it's like, okay, well, what do I want to do? Because they're going to make money regardless. So it doesn't really matter. Like, they're just giving you the blueprint that somebody gave them. But you need to ask yourself, like, what is my blueprint? Because what I see all the time is I see an agency owner that's like, well, we're all going to do this. Oh, everybody get on the train. It's like, cool. But then once again, if that doesn't work, what are you going to do? Like, what are you going to do if that doesn't work? Or if that doesn't fit what you want, like, you're just going to fall in line. That's cool. And then you're going to probably be out. So understanding and knowing that there's different lanes you can go down that have to fit you is super, super important. Right. And like, This is the key to get you from 20 to 40 or 40 to 50K plus consistently. I'm not, and once again, I'm not talking about people that are like, yeah, I'm making 50K, but they're actually broke. Like, screw that. That doesn't even matter. Truthfully, what I'm starting to lean on now, like coming on year 4, I'm like, I really just want to put an emphasis on like just making people make money. Like, I don't care, like actually make money. Like, dude, let me check your bank account in 6 months. Because at the end of the day, that's really all that matters. Like all the social media stuff and like posting and like leaderboard, and it's like, okay, that's draining, bro. But like, you started a year ago. How much money do you have in your bank account? Genuinely, like, are you building? Are you actually making money? Are you really like? If you stop today, would all of your business fall off and you'd be cooked? Like, you got to ask yourself these questions. And that's my only thing with like people who don't have, it's my channel, so I can say what I want. And that's why I like doing these, because I just rant. And if you relate with me, I appreciate it. A little caveat in the video. I know we're 20 minutes in. Like, if you are an agent or agency owner and you're like, yo, I need an in-house infrastructure, I want to partner up with you all, I think that it would be a good fit potentially. We're making 40K a month. We're trying to scale. Our agency is making over 100K a month or 150K a month. We're trying to get to 1 million. We want to plug in. We want a system. We want backend. We want support. We want staff. We want training, mentorship. We need everything to really help us grow and get there. What we're trying to figure this out. You can, go to our website. It's agentleadlab.com. Or you can go to my Instagram, right? Or you can go to our Agent Lead Lab Instagram. Just find a way to contact us, or you can check below. There's tons of information. Essentially, we would love to, if it would be a good fit, you can fill out our application. It's not cheap to work with us, so I'm just going to say that, offer it. It does cost something. But like I said, if it's something that you're interested, that's cool. So I just wanted to throw that little public service announcement in there. Now back to what we were talking about. So if you are like, the priority is not just making money. The priority is making money and keeping money. Because if in a year you were basically making the same amount, you may have spent on a bunch of stuff, but like, where are you going? And because if you're not building a team, you're not getting overrides. And even if you are building a team and you're getting overrides, but you're still in the same spot, then what are you really doing? Are you like working for a bonus, or are you working to make money? And then like, if you're building your book, are you trying to sell your book of business? Because if you are, like, you should be stressed. So these are the things that like you just don't think about initially when you're just work, 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 but you need to take a step back and like evaluate what your end goal is. And I only say that because like I did that. Like when I was an agent and I was selling, I literally I started out at the very beginning, I was making like, I did part-time. I was doing like 10 to 15K a month, right? And I was barely working. Like I was just doing what I needed to do, but I was willing to put the time in, so I got the skills down. 4 months in, I transitioned to full-time. When I went full-time, my first month I did 25K. I couldn't get past 15. I was like, all right, maybe it's just because I thought I could get to 25K by doing part-time work. And what I defined part-time was not actually like part-time. I had another job. No, like I would wake up, dial from, let's say it's sorry, not three. I would start dialing at 7:30. I would dial from 7:30 to 11. Then or 12. I would take a break from like 12 to 2. I'd dial from 2 to 5, maybe 6, and I was done. Done. And I'm like, yo, like, oh. Then I started paying attention to people. I'm like, okay, they're doing the same morning routine. They're kind of doing the same afternoon routine, but they don't stop dialing till 8. And I was like, there's no way that the sauce is in 8. I swear to goodness, those 2 hours made all the difference. The amount of pickups, booked appointments, and when I started one call closes I got during that time just from working 2 hours. Also, I actually started booking real appointments, right? So I actually sat down and said, like, what is actually justified as a legitimate appointment? Meaning, hey, like I was the person where I would literally I'd be like, hey, booked appointment. I'd be like, hey, Jane, yeah, blah, 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 blah. Yeah, I'll be out in the area. Like, oh, yeah, you can just come over and like hang up. And I would count as a book appointment because I was taught that you need to have 30 appointments a week, 30 apps a week, right? And then 15 show, let's just say 15 of those show. And then you close 50% of those. So you close 7, right? That equals 7K. And then you do that times 4, and that'd be 28K a month. It was like the road to get to 25K, right? Like that was what I was taught. That's what I was taught. So you'd book 15 from Monday to Wednesday, right? So you'd call on Monday, you'd book for Tuesday, Wednesday, you'd buy another batch, you call on Thursday, you book Friday, Saturday. I was doing part-time because I was doing half of that, and I would stop dialing at 6. I counted half pseudo appointments. So these are 15 real appointments, not 15 pseudo, meaning a real appointment is like tie down, information, name, written down, boom. 15. So I had to book 7 on Tuesday, 8 on Wednesday, or however I would do it, right? When I started doing that, I easily went over 30, 40K a month, every single month. All I had to do was 2 things, right? And it leads me into my next thing, which is dialing KPIs, intro, and closing on value. So this is more of the sales part. That first part was leads. Different type of leads can determine your outcome. Just that alone. Now, if you get into this, you really create predictability. Okay. So let's just look at like this is the sales side. Okay. And I like this side because this is like super controllable. I can give you the best leads in the world. If they don't pick up, I can't do anything. Granted, but if you do these things, they will pick up. You will make money. It's just simple. You just got to follow the blueprint. So dialing. Most people are like, how do I dial? How much do I dial? When do I need to dial? What does it look like? Blah, blah, blah. Okay. Let's just start here. You need to understand the law of averages. Okay. The law of averages based on input output in regards to what you're trying to spend. So if you've already said I'm going to buy high intent leads, you need to understand that you've already decided in your mind that you're going to get less leads. So do not try to expect that just because you're getting less leads, that everything just miraculously just going to be better. You're just paying for time. You don't have to dial 100 leads to make 20K. It's not that every lead's supposed to pick up, every lead's supposed to be a prezi. No. It's like instead of you dialing 100 leads to make 2 sales, you just got to dial 25 leads to make 2 sales. That's it. Maybe 3. It's just that simple. Don't overcomplicate it. Don't get in your own head. I always talk to people like, oh, well, these. I'm like, dude, you just got to work the leads, man. It's just a different way to work them. That's why people love age leads so much. They're like, oh, well, I buy 100 and then I know I'm going to make like 2 or 3 sales. It's like, yeah, dude, but if you just did that same effort towards the fresh leads, you would still make the 2 or 3 sales. But most people don't because in their mind, they have the wrong expectation, which is why we want people to start with aged and move into fresh. Right. But then move into fresh with the proper expectations. Don't move into fresh and be like, oh, yeah, everything's just going to now I got fresh leads. Like all my problems are solved. Like, no, that is not how it works. OK, so when you dial, right, I triple tap, meaning call, hang up, call, let it all the way ring through. That's 1 dial. Right. I do that 3 times minimum per day. So morning, afternoon, evening. Right. Evening for me is any time from 5 to 8 o'clock local time of the client. Right. That's super simple. Just doing that alone and doing that consistently and actually doing it because people lie and be like, I'm calling these people. I'm like, dude, you called them twice, right? And then when you did call them, you didn't triple tap them, right? So don't do that. People are like, well, I've been calling them. Like, you just gotta keep calling them. Call them at different times. You call them at I keep calling these leads at 7:30 in the morning during the week and they don't pick up. I'm like, cool. Why don't you try to call them at like 10 o'clock and do that during the week and then try it once different on the weekend. Like don't call them at the same time. Like if I called them Monday at 8 and they don't pick up, I'm not gonna call them Tuesday at 8. I might call them Tuesday at 10 or 11 for my morning slot. Like switch it. It makes 0 sense to me. And truthfully, that's like not even a lot of times. Like I'm the type of person, I'll call somebody at 8 and then I'll swing around. I work my leads in back. Like if I buy age leads, I work them in batches of 25. I'm buying fresh leads. You just got to work them. I'm killing them. Like I'm not even, that's like minimum. That's like very low. You're not really working if you're calling people 3 times a day, in my opinion. Like unless you have hundreds of leads, that's different. But if you're working fresh leads, completely wrong. Okay. Second thing is KPI. So you need to understand before you start, be realistic with yourself, right? So understanding that, dude, for every 100 age leads, this is typically what you're going to see. So you're going to get 2 to 4 sales, right? You're going to typically book or present to probably like 15 of them. I would say 15 to 20 max. Like that's absolute max, right? And the reason why your sales rate is so low here is because the reality is there's going to be a lot of people. And when I say present, I mean like you can kind of get into an intro, like and really kind of go through things. It's like they've already gotten taken care of. Maybe they're kind of like on the fence. This is like very, very drastic, right? Because you're closing at 10% of the people. So it's a little bit different. Then when you look at that, you want to also figure out like your cost per booked appointment. And these numbers keep going down in terms of like how much you're spending. And this number can vary. But the really biggest thing is like how many sales you're going to get. Okay. If you buy fresh leads, you still, if you buy 25 fresh leads, all right, you should still expect to close like 2 to 4 max. People are like, well, I should close more. No, you shouldn't. So many people don't pick up. You get to present to some, etc. All right, for our fresh leads, 1 in every 4 fresh leads is a booked appointment or a presentation. Presentation means you actually get into the conversation. Doesn't mean like you get all the way to the end. That means you just get into a thorough conversation and get past the intro and you get into it. Everything after that is in your control, but you should still be looking at closing, right? 2 to 4 max. Sales max, right? And then if you're doing the booked appointments, every 4 leads, you just do 4 times 5. Let's call it 20. Let's just call it six true appointments, like presentations. All right, so a 50% closing rate. That's kind of the easiest way that you should look at it, right? When it comes to intros, this is super important. Your intro should be based on the lead. Then your expectation, how your tonality should also be based on that. If I'm calling an older demographic, I'm going to be very straightforward, low key, very aggressive, not aggressive, I'm sorry, but very direct. And I'm going to tell them exactly like what happened, and we're just going to go through it and be very, 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 very assumptive. If I go into a mortgage protection, I'm not going to be nearly as like direct, and I'm also going to be very weary of doing like one leggers. I'm probably going to try to book appointments because they're going to be working, right? Like so, I could try to do a one call close genuinely if they're available, but typically you're going to be booking appointments. The next thing is if you're working like general life or you're working annuity, you are definitely booking an appointment. If you're doing an annuity, you can do a one call close. Sorry, if you're doing an IUL, I apologize. You can do a one call close, or tax-free retirement. You can definitely do a one call close, but it's highly recommended depending on, once again, your values and how you want to do it. If you want to like pitch it to them, you at least book an appointment. I'm not saying it has to be on Zoom, but it would be better to have that appointment so at least you can start having that conversation. Then from there, if you're doing annuity, that's already done. Like it's going to be multiple appointments. Okay. But the intro is super important because if you know the lead, you understand how to approach it, and you understand what type of assumptive start you should have. Okay. And then the last thing is going to be closing on value. This is super important because you could buy the same leads, work the same amount of leads, do everything the same. But if you close different, it can be a difference between you making 15K and 30K. And they're like, what? Okay, so just imagine that I'm talking to a final expense client, right? And I'm an agent, and I just like, dude, I keep writing 800. And I'm like, all right, let's listen to your closes. And every time you go to close, when you pitch the options, because life insurance sales is so straightforward. Like, there's not really, it's like, do you need it? Where are your problems? Okay, everybody, like, you need life insurance. It's super assumptive. It's like, okay. But then the thing where people, the difference between writing bigger premiums and smaller is literally just in how you close. Because unlike when you're selling other things, like if you want to work with us or whatever, like we need to present to you and make it make sense. The money is either you got it or you don't. Life insurance is not like everybody has money to put into life insurance. Like you can sell somebody on a $10 policy a month or a $500 policy a month. It's not like a fixed rate. You don't inherently lose anything no matter what it is. You just wouldn't get as much as you want. So that's the beauty of it. But if you don't close with value, you're screwed. And I can make a whole video on this. But you have equity protection pitches for mortgage protection. You have straight line term insurance. You can leverage regular life insurance as a way to protect your equity and grow your money tax free. If you're doing annuity, you have a whole array of annuity, and I don't have those closes because I'm not an annuity specialist at all. But if you want to, my guy has exclusive annuities. They have their own. You can go to a school. Or you can reach out to me directly if you want any sort of annuity mentorship. I work with him, so he's amazing. Like he helps people make a lot of money. And then final expense, right? You have supplemental income, you have income replacement, you also have a version of equity protection for final expense and veterans. So if you're not closing on value and you're just closing on numbers, like of course you're never going to make a lot of money. It's just logical. It's like, all right, I mean, I'm not closing on anything but. It's 10,000, it's 15,000, it's 20,000. It's like, okay, what does 20,000 do? Like, all right, so it's going to cover your burial. It's going to provide some income. So now there's value attached to it. So when they select, they're not just like, I'm selecting 15K and then you get charged back. They're like, yo, this is for this. Once you can start actually attaching value to it, you're going to have less chargebacks. People are going to understand why it is. You're going to have stickier business. You're going to make more. That's one of the biggest jumps for me. Not only I started doing full-time schedule, I went full-time, I started making 25K. When I went from 25 to 40K every single month, and I was like, okay, I'm hitting 40K every month. I'm like, yo, this is clockwork. The biggest lever I was pulling was just my closes. That's it. I started walking into a house. I was like, yeah, I'm not leaving here with at least $100 a month because this doesn't make sense. Like for somebody getting something that's less than $100 a month, no matter really what age they are, you just didn't do a good enough job assessing value. Because if you give them something that's less than that, obviously, unless they're like, they can't afford it, right? I'm saying if they can afford it, then it's like you just didn't put enough value in it. Right. And I can make a whole nother video on that. So I know this went long, but As always, please make sure you like, comment, subscribe. This is our blueprint. This is our formula. It is detailed. This is what we work our clients through. We make sure that they understand all these things. We figure out where they're at. We put them into the right ecosystem, and we help them grow. So if you'd like to work with us, if you have any questions, comments, concern, click below. Otherwise, I will talk to you guys soon. Y'all have a great day. Peace.